Hi, everyone. I'm Mike Pacito with I Am Global Partner, joined by co-founder of DBI and co-portfolio manager Andrew Beer. Thanks for watching our June 2026 update, whipsaw of a first half on the I Am Global Partner DBI Managed Futures Strategy ETF, ticker DBMF. Okay, let's get straight to the update this month, Andrew. Over to you.
Thanks, Mike. So we were down less than 1% in June, but ended the first half up around 10%, a bit ahead of the SocGen CTA index, and even more so ahead of the Morningstar US Trend systematic category for both June and the first half, respectively. It was a great first half of the year and an even better 12 months during which we returned more than 25%. Now, I find this performance particularly notable given the violent macro whipsaws we've seen so far this year. The first quarter saw war, soaring crude oil, equities down, bonds down, reversal in gold, a mini meltdown in Bitcoin, rolling fears of AI disruption, gated private credit investors, and predictions of a global economic slowdown. The second quarter saw a hot ceasefire, a brutal reversal in oil, leveraged and frenzied AI trades, the SpaceX IPO supernova, the return of King Dollar, and violent factor rotations. According to the standard playbook, commodity trading advisors, or CTAs, are supposed to struggle in such an environment, and yet they've been outperforming most hedge funds, including the fabled multistrats, so far this year. Now, the second bullet point is about the equity market. The whole thing looks increasingly like venture capital. Valuations driven by wild predictions of profits years in the future, a killing field for the losers. Small downward adjustments in assumptions, a low-cost competitor like DeepSeek, the feasibility of building data centers, the price of tokens, return on investment, could undercut current valuations. So if this time is not different, as they say, it's probably a good time to dial up diversifiers that can perform in down markets, which clearly don't no longer applies to bonds. So just saying. The last bullet point is about where I started. Replication is innovation, not imitation. We hit our 10-year anniversary in mid-July on the strategy, and the data show that we've outperformed virtually every large hedge fund in the SocGen CTA index since inception. Now, we believe this is due to structural alpha by capturing the same signal but much more efficiently. This was the right investment decision 10 years ago, and we believe it's the right one today. Now, here's a quick line chart of first half performance. The dashed blue line is DBMF, the pink is the SocGen CTA index, and the aqua is the Morningstar systematic trend category. At the bottom is the Bloomberg Ag Bond Index. Now, it's been a choppy whipsawing year so far, but this is a good visualization of how DBMF is highly correlated to the managed futures asset class as a whole, but over time has delivered meaningful outperformance in alpha generation. That is through efficiency, combined with the innovation of the replication model, we believe is the key differentiating factor that makes DBMF a compelling choice for fiduciary-minded allocators. Now, here's our updated since inception numbers. We've outperformed the flagship hedge funds in the SGCTA index by over 370 basis points per annum, and the Morningstar peers by over 475 basis points per annum. Our beta equities is slightly better, and our Sharpe ratio is meaningfully higher, as is our alpha generation. Now, we hope after 10 years, more and more allocators will recognize the value of this strategy and that we can be a cornerstone allocation within the diversifying bucket. So here's our slide on volatility adjusted positioning. The green bars represent exposure of our 10 futures contracts at the end of Q2, and the red dots are positioning at the end of Q1. Moving from left to right, we've dialed back our crude exposure, which we started to add in January, and now modestly short gold after the sharp reversal at the end of Q1. We added to our yen short, and now are also modestly short the euro. As inflation fears remain, we've kept our short position in treasuries across the curve. And now we're long global equities across the board, having reversed our US short at the end of Q1 and taking down a bit our long exposure in developed and emerging international equities. And finally, here's our first half contribution to performance. The money makers this year have been oil and emerging markets with a little help from gold. We're flat basically in US and developed international equities, down a bit in rates and currencies. So net, we're very pleased with the overall results, showing that even with 10 deep liquid contracts across the four major asset classes, we really do get all the diversification we need without the high cost friction and volatility of excessive complexity. And with that, back to you, Mike.
Okay, thanks, Andrew. So let's wrap up here with long-term performance numbers for DBMF. Annualized return since inception, including the month that was June 2026, is now 9.12%. It's nicely ahead of our major competitive benchmarks, and it's far ahead of the traditional diversifier for equities, that being bonds as represented by the Bloomberg GAG. And here's our new executive summary slate. 3.88 billion in assets as of June 30th. That's the largest in the Morningstar systematic trend category. Thank you, clients. Track record now over 7 years for the ETF and over 9% annualized since inception return, with a strong uncorrelated positive plus 23% return in 2022. That's when stocks and bonds were down quite a bit. Uncorrelated to US equities and bonds for that matter as well, with over 700 basis points of alpha, as a good alt should provide, and an expense ratio in the bottom decile of the category. So thanks everyone for watching and or listening to our monthly videos. If you have any suggestions in terms of things you'd like to see added, changes, or feedback, inputs, etc., please let us know. Otherwise, if you have more questions about the strategy, would like further information or a call with us, please don't hesitate to reach out. Just send us an email at team@imgp.com.